you on capital growth in the north, as you seem to suggest, about Liverpool, places like Newcastle, Sunderland, compared to the south. What do you think over the next 5 years? Do you think we're going to have so much growth in capital?
From the research that I've done and I can see, the north, in particular places, Manchester and Liverpool are quite good examples. There's a lot of regeneration going in. The people who own Man City Football Club have spent billions in their area. You've got the BBC Media that's gone in, and what's happened is the yields, as they've become less attractive in London and people are worrying about the London bubble. The only reason you buy in London now is because you feel that prices will maybe double over 3 or 5 years. I've got £1 million, I'm going to buy it for £1 million. In 2 years' time, it's going to be worth £2 million. My yield is 1%. But I'm going to make the £1 million in 2 years' time because that's the capital growth. As soon as those people start to think, hang on a minute, I might not make that £1 million, it might actually go backwards, they're starting to look at other areas. And they are definitely switching up, because there's a good example I showed there. Why would you not buy a property that's giving you 7 or 8% return on your money as opposed to one that's giving you 1%? And if you believe the capital growth opportunity is also better, then it's a no-brainer. You're going to start switching your money up to the north, and that is what's started to happen. So maybe I'm wrong, and maybe all the high net worth investors are wrong. But even if we're wrong, we'll be right, because all the money will start to switch up there, if you see what I mean. So it's just knowing when you get onto that bandwagon, if you like. And I feel last year, I felt that was the time for me to start to switch my funds and to say to investors to start to buy up there. And as I say, that is a really good example, that Ayers Road, where at 160,000, I was very, very confident that as it come to completion, you would get the 200,000 valuation, and I wouldn't be confident in London at all, So I think the prospects up there are very attractive. And as I say, because I buy for cash flow at a sort of 8% return, I'm hedging, my money anyway, because even if it doesn't grow, I'm getting 8%. I'm very confident. It's about finding those, and I know just everything becomes attractive up there because the build costs are so much lower. The labour charges, everything is less. So developers are able to give better discounts